Hi, this is Phil Martin, and I am the team leader of the Martin Home team. And this is the January 2023 market update. So let's get right into it. And let me share the screen and show you some interesting stuff. We're getting called with two primary questions these days. And the questions are, should we sit out? Should we write it? Should we bail, come back later? Some people have been in a full-blown panic mode, and you'll see why here in just a little bit. And so as we come into 2023, there has been some additional market movements or market trend factors that we're going to talk about today that I think are important. And the first one is interest rates. And the second one is the value of homes, because everybody's wondering about interest rates. Are they going to go up? Are they going to go down, et cetera? And here's what we do know. What this graph depicts is, and without getting too wonky here, mortgage rates tend to be a combination of a 10-year treasury note. That's a loan to the government that people make, and the government promises to pay them back. It's a treasury bill. That percentage that they're going to pay back plus 1.8% tends to be the mortgage rate. And the 50-year average and the additional that we've seen for the additional interest added for mortgage interest rates is called the spread. And so for 50 years, the average of the spread between the 10-year treasury note and the 30-year mortgage interest rate has been about 1.8%. So T-note plus 1.8%. And the two numbers have traveled very consistently together for years, except for the last year. And here, this dotted line represents the 1.8 average over 50 years. And you can see back in January, the spread was well below 1.8. We were very close to the treasury, the T-note interest rate. And that's why money was just so inexpensive. There was no spread. Well, as we got up into March and February, you see the spread jumps above 1.8 and then starts a meteoric rise and doesn't stop. We get out here and it jumped more than it's ever done in history in that short amount of time. And people began to panic. Buyers stepped away. Sellers were left hanging with what used to be a 5-day to sell a home, days on market. They're looking at 5 months to sell a home. But what we do see, and this is what I want you to focus on here on this, is in November, we had a steep decline in the spread. We're now back to 1.8, but it is coming down quite a bit in 2 months. And coming into January, will the spread continue to close in to the 50-year average of 1.8? No one knows, because the factors that led to this strange spread, if you will, a lot of people still don't understand all the economic factors going on, but at least it is coming down. So first point, interest rates are maybe not as crazy. They're high. They're higher than they were back here, but you can see why, right? But they've come down and really maybe they're beginning to stabilize is what the hope of the experts is. And so what about housing values on the other side of that coin? Well, if we go to housing values, I tend to like to go into what we see as our local stats. And let's take a look at a couple of these local stats here. This first one of my favorite, and we're just going to look at real quick, what is the median price for homes been over the past 3 years? How has it gone up and how has it gone down? And this chart breaks it up into 4 different tiers. As you can see here, we have the top tier, which is 700,000 to $1 million plus. We've got the upper tier, about maybe 500, a little below 5, up to maybe 700, 800. The lower tier, 370, going up into the 500s over time. And then the bottom tier, starting out 3 years ago at about 275. So as you can see, as we come across 1 year, 2 years, and 3 years, where we ended up is significantly higher for all 4 categories in the month of January of 2023 versus the month of January for 2020. You can see just the bottom tier of 270, let's say, top tier of 700. Now, the top tier is 960. That's 260,000. And the bottom tier at 350, that's 70,000 increase. Here's a funny thing. If we go back 1 year to January 2021 or 22, there's more value in our houses today than there was a year ago. If we go back 2 years, there's more value in our houses today than there was 2 years ago. And of course, there's more value in our houses today in Collin County across all tiers than there was 3 years ago. So why was everybody a little panicked? Well, as housing prices rose at the beginning of the year, right? And interest rates began to go up too. We finally hit a breaking point right here. And we had meteoric rise in 6 months and a meteoric fall in 6 months. But we still ended up having more value in our houses than we did a year ago. It's just that this spike in, like I said, record time, interest rates went up in record time. Housing prices went up at a record pace. And now here we are. Maybe it's beginning to slow down just a little bit. Let's look at this a little bit differently. I love this chart. What this tells us is since January 2020, you can see the solid line indicates the median price of homes that have been on the market for a while, 90 days. The dotted line conversely represents the median price of homes that are just coming on the market. So houses that have been there for a while versus houses just coming on. And you can see they're about equal back in May 1st, 2020. Out here, we started this trend of, the houses that are coming on the market end up coming on at a higher price than the ones who have been there for a while. We kind of evened out here, 2021, and then we see the meteoric rise. Look at this one right here. In this case, new houses coming on the market on the median price in Collin County, almost $50,000 higher than the houses that have been there for 3 months. And up here, it's even worse, like 625 to 5, almost what is that, 60,000, 65,000. And then all of a sudden, it came to a halt. During this 6 months, the sellers were pulling up those prices and buyers were chasing them. In the next 6 months, the buyers were pulling the prices down and the sellers were conceding, dropping their prices. If you look here, it's just the opposite. The homes that have been there for a while were at $595. Homes that are just coming on the market in September were $40,000 less. And you can understand why someone who has their house on the market and their neighbor puts their house on down the street and it's $40,000 less. We saw this. It was crazy. And it was just a race to the bottom we saw. But now look how the numbers are coming together again. And here we are at the January 2023, and we're only $10,000 apart. And I think that's really important to understand as a buyer and as a seller, because no one's chasing anybody anymore. We're pretty close to each other. So at the end of the day, what is it we're going to see? Are we going to see a 2023 stabilization of prices and of interest rates? Not sure. Is it a good time to buy or sell? Well, we think it could be, because they have begun to stabilize. The panic has come down. People are realizing, okay, we're clearing out all that discrepancy between houses that have been there for a while and houses coming on the market. And it's beginning to move. The velocity of the market is beginning to move a little bit quicker in the first 2 weeks of January. So will it stay this way? Well, the experts are kind of split. Half the experts we track, there's 8 or 9 of them, say, well, we think prices may go down a little. The other half say, well, we think prices may go up a little. Half people say interest rates may go down. Some people say interest rates may go up a little. But in general, the consensus is that by 2024, we will be into a full stabilization. We'll see if that comes to pass. But in the meantime, do you have the confidence to look into your situation and begin to plan to see if it's the right time for you? Or you may just go, this is a confusing market. I'm staying on the sideline. However you decide to ride that wave, as we showed in the first slide. So, Lawrence Yun, the chief economist at the National Association of Realtors, says the upcoming months should see a return of buyers as mortgage rates appear to have already peaked, which is what we saw on one of the slides, and have been coming down since mid-November. Okay. What do the other experts say? Well, David Stevens, former Assistant Secretary of Housing, seems to think that, be advised, this may be the one only window because remember how things are coming together over the next few years to get into a buyer's market, maybe. And remember, as the Federal Reserve's data shows, home prices only go up and always recover from recession. So what he's saying is, look, housing prices have come down. It's true, but they seem to be leveling out. But people say we're in a recession. Historically speaking, housing prices go up when we recover from a recession. So is this the best time to lock into not paying the landlord anymore? Well, it's up to you and how you think of it personally. Of course, Odette Akushia, the deputy chief economist of the Federal American, always makes a point that we always think is a great one. If you can find a home that meets your financial expectations for the monthly payment, and it also meets your expectations for how you envision your life to be for the next 3, 5, 7, 10 years, and it allows you to create and build wealth over that time, this may be the time to stop paying your landlord. You're paying somebody's mortgage, pay your own. Maybe this is the time for that. Because if you wait for the prices to fall, like a lot of people are still doing, you may continue to wait for a long time. A lot of people waited for the interest rates to go lower, and that didn't work out either. So it's always a snapshot in time. And what we invite everybody to do is go to searchtexashomes.com. You may want to look at different homes in different areas and then give us a call. And what we do is we will absolutely have a conversation. We'll go through your personal situation for your financial comfort zone, for what your opportunities are, what the possibilities for buying and home ownership are for you or for selling, and what that means and how we possibly could help you as well. So this is Phil Martin with the market update for January 2023. We hope that we hear from you soon. Take care.